The US dollar looks to be resuming higher after pausing for a couple of days ahead of key economic data from the US. And we'll have a couple of important central bank speeches from the likes of Kevin Walsh and ECB's Christine Lagarde to look forward to as well. The key data highlight will be on Thursday, a day before its usual release date, the non-farm payrolls report, which could set the tone for the FX markets for weeks to come. So ahead of that, we've seen the dollar index resuming higher here after a bit of a pause for a few days. The underlying trend is clearly bullish after coming out of this major consolidation pattern and breaking through that $100 level. More recently, it has been taking a bit of a breather inside what looks to be a bull flag pattern, as you can see. If it can now resume higher, this could put further pressure on the likes of gold and also the euro dollar. But one currency pair catching my attention today is the Japanese yen. The breakout on the dollar yen suggests that the path of least resistance remains to the upside, and this calls for potential intervention from Japan as they seek to control the yen, which has now broken to a new multi-decade low against the US dollar. The key level to watch is that 161.95 to 162 zone, where the currency pair had topped out previously in July of 2024. There was a possibility that we could have seen a double top pattern there, but today's breakout means that scenario has not played out, although rates could still turn lower in the event of an intervention from the Japanese authorities. But whether that will come and how effective it will be is another question. But from a purely technical point of view, the direction of travel is clearly to the upside unless we see a major reversal pattern unfold here on the back of some intervention or another stimulus. The strength in the US dollar is applying pressure on gold prices. We've seen consistent pattern of lower lows and lower highs, and each time gold tries to create a bottom, we see even stronger selling pressure in the days that follows. And we might be seeing a similar pattern now. We had gold rising for the last couple of days of last week before the sellers stepped back right in at the start of this week, which pushed the price of gold below last week's low of 3,959. So it has taken out the pool of liquidity that would have been resting there, namely stops from people who had bought on the back end of last week. Gold is now back around the 4,000 level, which is going to be very important for as long as we don't see a major reversal looking pattern around this key technical level. The path of least resistance is likely to remain to the downside. And if we get a daily close below this level now, remember we haven't closed below this level recently. We did try to break through it in the last 3 or 4 days, but so far the wicks of the candles show that price has closed above that level on each occasion. But if that changes and we get a daily close below the 4,000 level, then that could potentially pave the way for a possible drop to 3,500 over time, although the initial downside targets will be 3,900, 3,800 and so on. Bitcoin is looking quite heavy. It's been trying to stabilize for the last few days, as you can see here, but there's been very limited upside with price remaining below the psychologically important $60,000 level. And today it looks like Bitcoin is ready to take another plunge. So where do we go from here? Well, the next psychologically important level is obviously all the way down to 50,000. 55,000 is another level to keep an eye on because it's also a round handle. But until and unless we see a clear reversal pattern form on Bitcoin, there's no point in preempting where Bitcoin might bottom out. It's best to wait for Bitcoin to bottom out and then look for bullish setups. But for the time being, clearly the path of least resistance is to the downside. Thanks for watching. Don't forget to like this video, and for more market updates, head over to the news and analysis section of our website at FOREX.com. See you in the next update. Take care.